The Star Navigator and the Patient Farmer, a tale of two investment philosophies. My friends, I want to discuss one of the great debates in the modern financial world, a choice that every investor must confront. It is the choice between two fundamentally different approaches to owning a piece of the world's businesses. On one side, there is the path of the active hunter, the seeker who believes they can, through skill and effort, consistently outmaneuver the vast and complex market. On the other, there is the path of the patient farmer, the steward who believes the most reliable harvest comes not from chasing the weather, but from tending to a wide, fertile field. Let's call the first path the quest for the Star Navigator. This is the world of actively managed funds. When you invest in such a fund, you are not just buying a collection of businesses, you are hiring a captain. You are placing a bet on a specific individual or a team, believing that their intelligence, their research, and their foresight will allow them to steer your ship through the market's turbulent waters and reach the treasure island of superior returns ahead of everyone else. It is a compelling story. We are all drawn to the idea of the brilliant captain, the star navigator who can see what others cannot. The financial industry is built upon promoting these individuals, celebrating their past victories, and suggesting that their skill is a repeatable, purchasable commodity. Now, let's examine the other path, which we might call the philosophy of the patient farmer. This is the world of passive, index-based investing. Here, you make no attempt to pick the winning captain or outsmart the market. Instead, you make a simple, profound decision. You buy the entire harbor. You own a small piece of every seaworthy ship. You are not betting on any single navigator's skill. You are betting on the fundamental, long-term growth of global commerce itself. If the collective fleet grows, you grow with it. The critical question for the individual investor is this: which path is more likely to lead to a successful and stress-free journey over the long voyage of your investing life? The evidence, when examined dispassionately, points overwhelmingly in one direction. The quest for the star navigator, while alluring, is fraught with challenges that make it a notoriously difficult game to win, especially for the individual selecting the navigator. First, there is the challenge of identification. How do you, today, identify who the star navigator of the next 20 years will be? Past performance is, as the required disclaimer states, no guarantee of future results. A captain who excelled in calm seas may falter in a storm. The strategies that worked in one market cycle may become obsolete in the next. Picking a winning fund manager in advance is as difficult as picking winning individual stocks. You are simply moving the problem up one level. Second, there is the relentless force of friction. Active management is an expensive endeavor. These star navigators command high salaries, their funds maintain large research departments, and their trading activity generates substantial costs. All of these costs are passed on to you, the investor, in the form of higher fees. These fees are not a one-time charge. They are a constant drip, draining the returns from your ship's hull year after year. In a world where market returns are uncertain, fees are a certainty. They are a handicap that the active captain must overcome before he can even begin to provide you with a superior return. The patient farmer, by contrast, operates with near negligible costs. By simply owning the entire harbor and making very few trades, the friction is minimized. There is no need for a team of high-priced analysts or a star captain. Every dollar saved on fees is a dollar that remains in your account, compounding for your benefit over decades. This cost advantage is not a small thing. It is a powerful tailwind that works silently in your favor, year after year. Third, there is the problem of consistency. While there certainly are skilled active managers who have delivered excellent returns over long periods, they are the rare exception, not the rule. The landscape is littered with the reputations of captains who were stars for a few years, only to see their luck or their strategy fail them. The sheer number of participants in the market, all with access to similar information, all employing brilliant minds, makes it mathematically improbable for any significant number of them to consistently outperform the collective average of all their competitors, especially after accounting for their fees. The market, in its aggregate, is the collective judgment of all these active participants. To beat the market, a manager must not only be right, but they must be more right than the collective wisdom of thousands of other smart, motivated, and well-funded individuals who are all trying to do the same thing. This is a formidable, some would say impossible, task to sustain. The philosophy of the patient farmer offers a different kind of freedom. It is the freedom from the anxiety of having to pick the winning captain. It is the freedom from the disappointment of watching a highly touted manager underperform. It is the freedom from the constant churn of selling one fund to buy into the next, supposedly better, one. Your returns as a patient farmer will never be at the very top of the performance charts. But, crucially, they will never be at the very bottom either. You are guaranteed to capture the market's return, whatever that may be. Over the long term, the market's return has been more than sufficient to build substantial wealth. By eliminating the costly quest for superstar performance, you position yourself to reliably capture that market return, and in doing so, you are likely to outperform the vast majority of those who are frantically searching for it. This is not to say that active management has no place. For the rare individual who possesses both the extraordinary skill to identify a true star manager in advance and the patience to stick with them through inevitable periods of underperformance, it can be a viable path. But this requires a second order of skill, not just skill in investing, but skill in manager selection. This is a hurdle that most individuals simply cannot clear. For the doctor, the teacher, the engineer, for the person whose expertise lies outside the world of finance, the choice becomes clear. Your own profession is your circle of competence. The most intelligent investment decision you can make is often to acknowledge the limits of your knowledge in a fiendishly complex and competitive field. Therefore, the most reliable approach for the vast majority is to abandon the exhausting and expensive quest for a star navigator. Instead, embrace the quiet, patient work of the farmer. Own the entire field, accept the market's return, minimize your costs. And then, with the time and mental energy you have saved, focus on what you do best, excelling in your career, spending time with your family, and enjoying a life free from the need to constantly monitor the performance of a hired captain. In the long run, building wealth is not about finding magic bullets. It is about avoiding unforced errors. The quest for a star manager is fraught with the risk of such errors, picking the wrong one, paying too much for the privilege, and switching horses at the wrong time. The patient farmer makes few decisions, but makes them wisely. He understands that in a world of uncertainty, the most powerful strategy is often the simplest one. Own the market, keep your costs low, and let the relentless power of compound interest do the heavy lifting for you. That is the path of the true long-term investor. It is not the most exciting story, but it is the one most likely to have a truly happy ending.